All right, today we're going to do something a little different. We're not just going to look at a form. We're going to tear it apart, analytically speaking, of course. We're talking about the form W-8BEN, and I want you to think of it less like paperwork and more like a set of keys. Each part of this form is a specific key designed to unlock a very specific outcome in the US tax system. So let's dive in and see how this whole mechanism really works. Okay. It all starts with this one number, 30%. Now you really got to get this. 30% isn't just a tax rate. It's the factory default setting of the entire system. It's the starting point, the baseline that kicks in automatically for any foreign person earning certain types of income from the US.
So this is the universal rule, straight from the Internal Revenue Code. The best way to think about it, it's like a toll booth on a highway. A 30% toll is automatically charged on your money as it leaves the US. It just happens, unless you can show the right ID, the right credentials that prove you get a discount or can pass for free. And guess what? That set of credentials, that's the whole point of the W-8BEN.
So here's how we're going to break this down. First, we'll dig into that 30% rule. Then, we'll look at how you certify your foreign status. After that, the really powerful part, unlocking tax treaty benefits. We'll also solve the taxpayer ID puzzle. And finally, we'll talk about when your form expires. Let's get to it.
All right, first up, the 30% withholding rule. We need to get a handle on the default system because really, the W-8BEN exists to solve this one big problem.
And look, this comes straight from the IRS instructions. They lay it out plain and simple. Foreign persons are subject to a 30% tax. This is the rule, not some kind of weird exception. And here's a super important point. Failing to give them the right paperwork isn't a penalty. No, it's simpler than that. It just means the default rule, that 30% clicks right into place, automatically. So what kind of income are we talking about here? Well, the rule's scope is what makes it so powerful. It hits a really broad category of payments. Dividends, interests, rents, royalties, basically any fixed or determinable income. Think about it. Dividends from a US stock, royalties from a song, even certain payments for services. The system is basically designed to cast this huge net over all sorts of money flowing out of the country.
Okay, so how do you fight back against that 30% default? Well, this brings us to the form's first and most basic function. Think of it as the first key you use. It's a simple but incredibly powerful declaration. I am not a US person for tax purposes.
Now, this is absolutely crucial. The system has a very specific definition of a US person. It's a US citizen or what's called a resident alien. The W-8BEN's entire job, its core purpose, is to be your sworn statement saying you are neither of those things. If you are one of those, you'd be using a Form W-9. So the big question is, what exactly makes someone a resident alien?
Well, the system figures this out with two main tests. First, there's the green card test. Super simple. If you have a green card, you're a resident alien. End of story. But if you don't have a green card, it moves on to the second test, the substantial presence test. This one's all about math. It counts the number of days you've physically been in the US over the last 3 years. And here's the kicker. You have to fail both of these tests to be considered a non-resident alien and be able to use the W-8BEN.
But here's a really interesting wrinkle, a non-obvious detail you have to know. The system knows that not all time spent in the US is the same. See, if you're here on certain types of visas, like a student on an F visa or a teacher on a J visa, your days might not even count toward that substantial presence test. You're what they call an exempt individual for that specific calculation, which is a huge deal.
Okay, so we've used the first key to prove we're a foreign person. But now we get to the form's most powerful key, the real game changer. This is where you can use the W-8BEN to invoke an international tax treaty and just slash that 30% withholding rate, sometimes to nothing. And here it is, laid out plain as day. Look at this cause and effect. On the one hand, you've got the default,
that 30% hit. On the other hand, you see what happens when you use that tax treaty key correctly. Dividends can get cut in half, down to 15%. Interest and royalties, man, those can drop all the way down to 10, 5, or even 0%. This is, without a doubt, the most important job this form does.
But wait, this isn't just an automatic freebie. No way. To unlock these amazing benefits, you have to check a few very important boxes. You've got to be a resident of a country that actually has a tax treaty with the US. You have to meet that treaty's own definition of residency. You generally can't have a permanent establishment in the US. And you have to provide the right taxpayer ID number, which, you guessed it, brings us to our next puzzle.
All right, let's talk about the taxpayer ID puzzle. And honestly, this is a spot where a lot of people get tripped up. The form asks for these numbers, but it's absolutely critical to know the difference between a US 10 and a foreign 10, and more importantly, when you need to use which one. Okay, first up, the US 10. Think of this as the big umbrella term for any tax number from the US government. This could be a social security number, or for most people filing this form, an individual taxpayer identification number, or ITIN. So what's an ITIN? It's really important to know this. An ITIN is just a tax processing number. That's it. It has nothing to do with the immigration. It doesn't give you permission to work. Its only job is to let the IRS track people who need to file or report something for US tax purposes, but can't get a social security number. And then you have the FTIN, the Foreign Tax Identifying Number. This one's easy. It's just the tax ID number you use in your own home country. The reason they ask for it on the form is to help prove that you are, in fact, a tax resident of the country you're claiming.
So this is the million-dollar question. When do you actually need a US 10, like an ITIN, on your W-8BEN? Well, there are a few specific triggers. The big one is if you're trying to claim tax treaty benefits, but you don't have a foreign TIN to put on the form. Another trigger is if the income is from a US partnership. These are the kinds of situations that flip the switch and make that US number a requirement.
All right, let's move on to the form's expiration date. A huge mistake people make is thinking this is a set it and forget it kind of deal. It is absolutely not. This form is a living document, in a way. It has a very clear shelf life, and even more importantly, there are things that can make it invalid literally overnight.
So the expiration rule can sound a little confusing, but let's just walk through it. A W-8BEN stays valid for the year you sign it, plus 3 more full calendar years. So look at this example. You sign it anytime in 2026, even on New Year's Eve, December 31st, it doesn't matter. It will stay valid all the way until December 31st, 2029. So that part is totally predictable. But what is it? Yeah, what could invalidate your form overnight? The answer is simple: your life. The system has this critical rule called a change in circumstances, and it can make your perfectly valid form worthless in an instant, long before that official expiration date. So what are these triggers? Well, think about big life events. You move to the United States, you become a US citizen. You pass that substantial presence test we talked about, and become a resident alien. The moment any of that happens, your W-8BEN is wrong. It's invalid, and the rules are super clear. You have to tell the company paying you within 30 days and give them a new form, probably a W-9. If you don't, the information they have on file is just plain false.
Okay, so we've pulled this whole thing apart. Let's put it back together and lock in the key takeaways, the core principles of how this system really works.
So here are the core principles you have to remember. First, the default is always 30%. The system starts there, and the burden is on you to change it. Second, you have to certify. You can't just assume. The W-8BEN is you actively declaring your foreign status. Third, treaties are your best friend here. They're your leverage, and this form is the only key that unlocks them. And finally, remember this form is dynamic. It's not static. Its life depends on both the calendar and your actual life circumstances. And all of this brings us to one last,
really important question that you should ask yourself. The W-8BEN isn't just a piece of paper you fill out once. It's a precise financial tool. And now that you understand the mechanics behind it, the real question is, does your Form W-8BEN reflect your current reality? And is it getting you every single benefit that you're entitled to?